Good morning, Quasar Markets Live. Happy Wednesday to everybody. I've got my main man back in the seat here with me today again, Stephen Big Bead. Or before I even say hello, Steve, I called Bitcoin, didn't I, there yesterday?
Yeah, I mean, look, Bitcoin is still hot on the trails and still pushing. I think to me, Bitcoin is a proxy for how people feel about the election, being that Donald Trump is more prevalent to crypto and Kamala Harris is catching up to the crypto craze now. Look, I was in Nashville at the Bitcoin conference and I saw him speak personally, and even myself, I agree with his points on crypto, and I think this is a proxy on the election.
Yeah, that's definitely the thoughts out there. I will point out, we talked yesterday, taking a little bit of a victory lap, 68,000, where I said to take a look for it to go all the way up to that point. It did hit
Yep.
that, broke a little above it, has retraced a little bit here, but a healthy retracement and trying to catch back up. I pointed out to you earlier in our Slack channel, open interest still high. So this thing it won't take much to blow it up. And I want to point out two things. There was only, and when I say only, $87 million in liquidations yesterday. It wasn't the
Wow.
200, 300 that we used to see making it make that move. Why is that important? It shows how little Bitcoin there is in the supply right now. Now,
Right.
it does not take much to move the price tremendously. And what I'll point out is there's still a tremendous amount of open interest, about $71 billion dollars in open interest right now on Bitcoin. So keep that in mind. So this thing could still power to keg either side. Shorts had a chance to reload overnight. It looks like they have, with the long shorts actually moving slightly now to the long position, 50.71 to 49.29. So you have volatility available on either side of that. So Bitcoin definitely one to watch today. I will
Yep.
say if you break yesterday's, high here, if you can get above 68, it would take about 68.5. It's 68.388 was the high of the day. 68.5 and you will see 70,000. It will be a
Right.
liquidation formed problem there. And again, the other way, if you see any kind of spurt down towards that 66 level, and it's actually about 66,250, where I'm seeing a lot of leverage built up, where longs would get liquidated. So that's what I'm watching there on Bitcoin. Banks, Steve. They're continuing to impress. Again, where did you hear that? You heard it from Big Beat.
Yeah, I mean, look, banks need one thing, and that was money. And we have a government right now that's been telling everybody to put their money back in the banks. They're very nervous about the banking industry, and banks are, having cash. I don't think it's the banks that are doing it themselves. I think it's a big help from other outside sources. And let's talk about that for a second. The biggest winner of the market right now is people who have moved money into cash right now and are doing that at a very big clip right now. And because of that, guess where they're putting it? In the banks. So the banks have money to lend again. This is the largest cash holding. You can also thank Mr. Warren Buffett himself, who has the largest cash holding in his lifetime ever, and even percentage wise now, he's got the highest. And because of that, that's helping banks have cash. When they have cash, they can lend it out. When they lend it out, they make money, and that's how it's being made money. We're not seeing more trading revenue coming in, which I was really wanted to see. You're just seeing more investment, which is good because we need more housing. People need to have rent. There's a lot of things going on here, and buying cars and making the economy move. So this is not a bad thing. This is a good thing.
Absolutely, and Morgan Stanley, like I said, the one that earnings this morning, they are up about 4% here on that news. Their net income rose 32% to about 3.2 billion, or $1.88 a share. That was up from $1.38 a share same time last year. So again, blowing away sort of the estimates and everything else. Their CEO, Ted Pick, did say in a statement that the bank's institutional securities division, where the investment banking and trading businesses sit, reflected momentum in the markets and underwriting businesses on solid client engagement. Pick said that the buoyant stock market and net inflows supported the wealth management and investment management arms assets. which now are showing 7.5 trillion in their wealth business, among the largest in the world. Again, managing over 6 trillion client assets right now. So we're seeing the big continue to have strong earnings, as we said. You've been talking, Steve, about the market sort of frothiness. We see David Ihorn now jumping in and again bringing up what you had been saying for the last few days, and then echoing, Warren Buffett's that, and you said this yesterday, right? I'm not calling for a crash. I don't know when it comes. I just see this. And what their statements was that it's just overvalued. Stock market's the most overvalued since David
in
Ihorn
history.
started his company in 96.
Yeah, I mean, he could say 96. I agree with that, but I think it's getting very close to almost the massive frothiness we saw in 1929, 87. This is out of control. This is beyond .com. There are little things that are different than the .com, and one of those would be the bond market. We talked about that yesterday, but this market is overbought. I mean, I don't know how to explain it any other way. It's overbought. It's out of control. And if you don't believe me, believe everybody else. I mean, Warren Buffett's saying it. I think the only thing that's holding this market up is option market, which will get blown out. I think there's a lot of people here that just is hope and prayers and feelings and love and luck and all that nonsense does not work in the market. The market's a mechanical thing, and when people start to get nervous, this rug pull will be dangerous and fast and swift. But people with cash on the sidelines will be like, "Thank you very much." As I've always said, Howard, I want to be the ticker taker, right? The ticker taker is the person that, as people are coming into the market, "Thank you very much. I'll take your shares." As you leave the market, "Thank you very much. Here's my shares." I want to make sure that people don't, understand that, right? That when you're looking at the markets in general, I want to be that person at the door who, as they're fleeing the market, I'm sitting there taking their shares, and as they're coming into the market, I'm selling it to them, right? I want them to understand that well, quite frankly, that this market by PE ratios, by Sharp ratios, by all the metrics that you would look at a market, we are so overbought. It's beginning to be a little bit nervy, even for people who have to hold money long term. And those David Einhorns aren't just traders, they are investors. They are people who invest for longer term. And they're saying, you know what, this is not good. This is bad. Get the hell out. Are they doing it to suffice themselves? Yes. Are they doing it because they're talking their own book up? Probably, but they're not wrong.
Yeah, I mean, the market, you can't, PE earnings and those things do not lie. They have been showing and moving up and up and up with, no stopping lately. Let's take a look at what we have going on here as we are about 20 minutes away from the open. We're seeing VIX is getting a little higher here, up above 20, so up about a little over 3/10 of a point here on that. QQQ is getting a little bit of recovery here as we do see some of the chips in the pre-markets, other things moving up. Steve, I know yesterday you were trying to get into ASML. Did you ever get into that trade during the?
I didn't. I really wanted in. Look, stock was at 724. Today we're at 703. It closed at 730. I tried to take some of that win off. I didn't get into it, and I had a feeling we'd see a little nice pop. I'm just trading ASML. I'm not investing in it yet. This morning it got down to about 690. I thought that was a little bit better on ASML, getting closer to like way oversold. This selling is a little bit overcooked here. Just to put this in perspective, this was a $1,200 stock not too long ago. I think 1,070 and 1,127, somewhere around there, right?
Yeah.
Somewhere around there. So look, ASML, I get it. They had bad earnings, and they weren't that bad, I don't think. But what the guidance was not good, and I think guidance has been the key here and almost everything we've been talking about. And here we are now at 702.80, 703, that area. Look, this would take you all the way back. Um, if you look back in July of last year, July 24th last year, you're looking at a stock right around 760, 750. If you go back all the way back to roughly October of 2022, you're seeing lows down there at 385. So I don't know how to produce a support level here yet because we're not quite there. If you're looking for support, it's 580-ish, somewhere around there, in the last sell off. But this is a very wicked move here in ASML. But here's what I see: I see a massive gap up there at the very top. But if you yeah, exactly, two of them that have not been filled yet. You saw one of them that was filled not too long ago, but this one here needs to fill a gap. And to me, honestly, wow, this selling is really strong here. So uh, people don't feel good about it right now.
Yeah, and I wonder how much of that is. I talked to you earlier. I had never even heard of the this before, the granolas, which are the equivalent to the Mag 7 here in the stock market in the U.S. That they have their granolas there, led by companies like GSK, Roche, ASML, Nestle, Novartis, Novo Nordisk, L'Oreal, LVHM, and AstraZeneca. So,
Yeah.
and most of them have had some pretty dismal returns when you compare them to the leaders in Nasdaq here in the U.S.
Yeah, I mean, for me right now, I'm looking at the markets. I'm not seeing anything in the markets right now. I know the Nasdaq is all over the map right now. VIX is still pretty weak. Um, when we saw this morning, and of course, one of the things I always look at is oil. Why oil? Because that's what moves the world. Um, Oil getting below $70 a handle here, closing in on that 70 handle. As it continues to get below that, that's a proxy on the world right now, right? And we're not seeing that. Um, this nice little run up to about 71 a barrel, and right back down it goes. Why? Because there's a floor down there. Why? Because the government, U.S. government, is buying for the SPR that they sipped out of and sucked it almost dry, and they're having to replace it. And they said anything below $70 a barrel that they're going to be buying, and you're seeing that. You're seeing it in real time. So, look, I still don't know that if there wasn't for a government buying oil, I don't think oil would have a floor at all. I think it'd be back to 40, $50 a barrel, because
Wow.
we're seeing that. Yeah. Um, if the government would just stop buying oil for a little bit, they probably get a better, cheaper price. Because quite frankly, there's a problem here, and that at that point, oil companies aren't making money. At under 50, 55-ish is roughly what we need for West Texas, and for shale oil up in the Willow Fork. If you don't know Willow Fork, or you don't know the different areas in Texas, I can pretty much go through the Permian Basin for you. Um, but Eagle Ford, those need to make somewhere between 55 and $60 a barrel, to be profitable, and we're not seeing that right now.
Right? No. And like you said, the bond market, Bank of America survey found that bond allocations are seeing a record drop
Yeah,
amid the jump in investor optimism.
yeah,
So we are seeing that there. It says allocations to stocks surged while bonds saw a record drop. Bank of America said in an October 15th note on the survey, cash levels fell to 3.9% from 4.2% too. So, Bank of America Bull and Bear indicator indicating froth is rising. It's not yet the big sell signal, they're saying. Fund manager survey found bond allocations dropped to 15% underweight from 11% overweight, while global equity allocations jumped to 31% overweight. So they're definitely still in the stock market.
Look, I know people are giving the poo-poo on lithium batteries and on EV, but I'm just reading. I just looked up there because I have all of my news, my bigger news, like Wall Street Journal and Barron's and that. General Motors is betting another $625 million on a huge lithium project. Lithium, lithium, lithium. If you don't think that electric cars are coming, you're absolutely wrong. I don't care what anybody says; they're coming. They're just mediaizing the hell out of it, and look, it's coming. So General Motors is throwing down the gauntlet. Ford has thrown down the gauntlet. Look at the new Ford truck; it's all electric. It's selling well. You're seeing the Hummer is electric. Wow. Look, I get it. There's this, as a student of history, I was reading about the time when cars were coming and horses were prevalent, right? And the people that owned horses just were not happy. And the people who made seats for horses were not happy, saddles, and people who are making horse and buggies were not happy, and buggy whips. Look at them right now. There's no such thing, right? Maybe the Amish have them. And you look at it in time. Do you know where the first gas station was built?
No.
Uh, it was built in the great city of St. Louis, Missouri.
Ah.
Look, and people don't realize that that's the middle of the country. This wasn't in some place in New York City or in other. No, it was in the middle of the country. They were the first to adopt this, and guess what happened? They were ridiculed for having a gas station. No reason for a gas station. There were no cars. Why are we building cars? Why? Because Detroit, Michigan was building cars. Detroit had to have a rubber for tires. They were running out of rubber. Remember that? No, you
Yeah,
don't remember
well,
the
in
rubber.
those days, a lot of cars were built here in Ohio. This is where Ford had his second largest factory.
Exactly. Why? Because that's where people were. People aren't there anymore. People are all over now. But now that roads are built, we had them more spread out of the country. That's a history lesson for everybody that still thinks that electric vehicles are dead and not going to work and all that nonsense. The truth of the matter is, it took a little time. It only took, I don't know, 60 years. I mean, it took until 1950s till Eisenhower had to build the first interstate highway. Do you realize? I'm going to tell you the truth. People were against the interstate highway. Uh, Howard, they did not want to have it. They didn't feel like they needed it. They didn't want to connect with other countries. How could you
Well, they said it
imagine?
was, yeah, and it took away their land. I was actually reading
Could you
up in
imagine
Hamilton,
that
Ohio,
today?
here down there. They didn't want to be part of 75, which is the road that comes
Can
all the
you
way from
imagine that
Florida.
today?
Yeah.
Can you imagine that? What would 95 in Florida be like? Now there's a highway that connects all the way from Florida all the way to New York. There's a highway that goes all the way from California all the way out to DC. Why? Because people wanted to move around, but they weren't sure at that time, and they were against it. Now you're starting to see that whole thing, that whole history repeat itself. Oh, we don't want electric vehicles; they die in hurricanes. We don't want electric vehicles; they just don't. There's going to be a time. I just saw a new electric battery for cars that literally plugs and actually charges in 8.5 minutes. Eight and
Wow.
a half minutes per car. That's what's going to change, right? It wasn't until gasoline. Do you know that gasoline used to get 3 miles a gallon? Do you know gasoline used to
Cars
get
are.
20 miles a gallon and then 30 and then 50 and it grew, right? It had to get better and better and better. And that's what's going to happen. And I'm telling you the same thing with AI. It's happening. It's happening with electric vehicles. It's happening with technology. It's happening with quantum physics, quantum computing too as well. Look, these things are happening. And if you know what, I don't want to be the person that's investing after everything's blown up and grown and everything's happened, right? I want to be a person that's investing now for the future. And I think that's what the difference is when you're looking at the media. Sometimes the media sensationalizes things and, oh, how many cars blew up because they had salt water in there during the hurricane, right? Okay, maybe 30 cars. Okay, we get it. Guess what? The next iteration of cars, there won't be salt water that get into the battery, right? That's what I'm saying here this morning is that, you know what? I like this stuff. I like investing early. I don't like investing late. I like being a part of the next generation of things, and that's why financially it's been good for us because we don't look at the past. For me, I'll tell you what. If you want to, if you're out there and you don't really know where to invest, LIT is a good one, right? It's an ETF. The lithium ETF gives you a gamut of all of the different lithium companies that are out there. Guess what else we saw in the energy space? You've been talking about it too, Howard. Is nuclear energy, right? Microsoft is buying nuclear energy. Think about that. They want to make small nuclear companies, and they want to buy them. Why? Because it's easy to power it. It's clean, right?
And you can see
If you
VST up almost 2% pre-market here. Talon, TLN, two of them that I brought up that are not as well known in that nuclear area, both doing well. I'll close another play. That's from our
yep,
boy Jeremy Vreeland and Matt Tuttle. Look at that, up 12% in the pre-market here and moving. So that's definitely one to keep an eye on today. That's a pumper. It cleared liquidity zone that he was looking at here and now has open skies above it.
and that's what we do here.
Yeah. Couple of pumpers we have to talk about this morning, trying to be today's version of DRUG, which, by the way, Steve pointed out on its first move up yesterday at $5 when it got stopped and showed up on Quasar Markets, which everything does on our halts. Let me pull that up for people to see here, right on my widget here.
Yep.
This is my own setup at bottom left-hand side here. You see I have halts. I'll pull it up a little bit easier for people to see.
Yeah, and
right
yesterday,
here.
Howard, when we put, I called drug at around $5. Today it's at over 30. I mean, that's
Yeah,
over.
that's it's insane. These pumpers. I mean, I've been pointing them out, week after week here because they just continue to. They're just there. It's the new memes coin. It's what is Wall Street bets? These are all the ones they've got in there, and that they're talking about. So you got to keep your eye on them. Today, there's a bunch of them moving. Duo, the one that's moving right here now. Duo's been is Fanged Network Group. This is one again. If you look back on the daily chart, you'll see that it's one that it plays this game on a regular rinse and repeat. I mean, these things don't they look like your old sheep there, Steve? They look like a meme coin, right? It's they do
Yeah.
nothing, they do nothing, then all of a sudden they explode for a 400-500% win. In a matter of moments. So keep an eye there. TAPST is another one I'm watching here. Tempest Group. ADTX, another pre-market mover that's in the mix here. And again, I like to look at those on the 3-minute chart here. So if we take a look, I was looking, CTCX was interesting because it's one that's, again, what I call a serial pumper. You can see I have lines in here going back to yesterday and then last week on this one because it's just known to do it. Watching it here today, if we can get a break back through that 51, but I'd say 52-cent area, which is VWAP, and then a little bit higher, break in the candle that you see here back a little bit earlier. Definitely one to keep in mind for a play here. Again, if that can break through 51.90, look for a run towards 64 cents. So that'd be a huge move up. VS was another one up over 200% here, and you can see it's making a move here. If it breaks through VWAP here at 9:30, this is lining up to me like a lot of the ones we've been watching lately. If it makes this move here, gets through that VWAP, you will see an explosive move back up towards that $6 range that it was trading earlier. So again, there are definitely a couple here to keep an eye on. Make sure they confirm what we're saying here before you enter a trade, and make sure that you have a stop loss and a take profit on these. They move quickly and you don't want to be on the wrong side of them, but we do want to point out some of these pumpers this morning. Buru is another one, BURO, actually making a move here already. Again, can this get back across that $1.13? If it does, would be prime for a play up towards $1.30. So that's a good one to keep an eye on. STEC, again, another one. It had been up as high as 470 earlier this morning, and look at the wick it's getting now. See, as people, these things get a second life right at 9:30, as a lot of traders that don't understand they could actually buy these at 6 a.m. start to get into the market at 9:30. So watch for volume on these. Volume will lead to price discovery, so we want to keep an eye on that. Steve, what are you watching here this morning? So we know ASML is one that you'll be keeping an eye on this morning.
I tell you,
Humana still in play for you at all, or
I'm
UNH?
in,
What are you thinking here?
I'll tell you one of the articles this morning on the Wall Street Journal that I'm reading it again just to make sure I get it right and to understand it. But with Goldman Sachs reporting a 45% increase in third quarter profit. Okay,
Yeah.
let me repeat that again. A 45% increase.
32 Morgan Stanley. I mean, these
Correct.
numbers are, that's what I'm saying. These numbers are huge, and they're not even really moving the price. So it shows you how much these things were. That what is the PE on? Let me get Goldman Sachs up here because I'll be
And let
curious.
me tell you what David Solomon, the CEO, was
Okay.
talking about. He says Goldman has been undergoing a strategy shift. He says that exiting the consumer lending after incurring billions of dollars in losses. Okay, so consumer lending meaning credit cards, maybe giving money.
Apple Card.
Right, Apple Card really screwed them. Okay, the bank is instead refocusing on its core businesses. Now, I've been saying that for 3 years now. They need to go back to the core. How Goldman, how J.P. Morgan, and Morgan Stanley make money. They're money printing machines. But he goes on to say their core business of deal making and trading while growing its asset and wealth management divisions. Says the Federal Reserve's recent interest cut is seen as a positive for deal making, helping awaken Wall Street from a long malaise caused by high interest rates. How long have we been saying that? Low interest rates is good for the economy. Keep them low. The Fed messed up by raising rates too fast because they said that they wanted to. No, it's about lowering rates, getting the economy moving again. And why is it important? Because I think we've had two major problems in the country. One obviously was COVID, so that really hurt the economy. And number two is these. I mean, not just hurricanes in Florida, but we've had tornadoes. North Carolina has been hit. There's been a lot of problems. So getting that moving again is going to take lower interest rates. So David Solomon is 100,000% right, and it's going to help create a soft landing. The Fed was wrong, and the Fed it's been wrong, and it may very well be the reason that they have another 50 basis point cut here coming up. And because of that, that's what probably the market's up. But I'm telling you the same thing: the markets are way, way, way overbought right now. At least now with the numbers that we're seeing here.
I just had Goldman Sachs up. It's at about a 15 on its PE. Not as bad as I actually thought it would be based upon the move up that they've made lately. Another thing I want to point out, Steve, there is, unfortunately, what we're hearing from a lot of these companies is something that we've already known and seen. The rich keep getting richer, right? The people
Yeah,
been
just
talking
ask
about. Yeah, and what I mean by that is I was watching yesterday a couple of talking heads talk about the fact that while equities are up so much and in theory wages have risen so much that people are in a better state, and if you held hard equities, whether it was property, whether it was gold, whether it was commodities, you're in a good place. The problem is only 44% of Americans actually hold those things.
That's correct. Yeah,
And when you break that down even further, it's only like 20% that actually have a meaningful amount, not maybe 401k.
Yeah,
Is,
if you ever hear me give this talk, I always talk about it all the time. Warren Buffett's right. He says if you're born in the United States, A, you already won the lottery. B, if you're an investor in the United States, you won the lottery on steroids. And C, if you're an investor, not just a trader, you've really won the lottery because you're going to do okay in life, right? They've already told you. That's what Warren Buffett's words, right? He's right. Very simply, if you have the means in order to invest, you are already in the 1% of the world, right? If you don't have the means to invest, now that barrier to entry has been changed because of Robin Hoods of the world and zero commissions and things of that nature have really changed the world, and options being zero DTEs now. Things are really changing how we structure that, and it's been open. But there hasn't been more investors. There have been more traders, but not more investors. The world of investing in finance needs more investors, long-term people that are looking to put money away. Your bigger companies have 401k plans, IRAs, and things of that nature to help move your wealth. When I talk about investing, I talk about one thing. It's about building wealth. I'm not here to teach you how to just make enough money to live off this week. I'm trying to help you understand how to build wealth. If you ever want to know the book, The Richest Man in Babylon is a great book. It explains how, you want to have several lines of creating wealth for yourself, not just trading. If you're just trading, you're not gonna make it. I'll tell you that right now. 75% of traders don't make it very well. You need to be able to put that money away. And when I make money, I invest it in other things long term. I have a long term portfolios. I have asset classes that I keep around me. Right. That's how you build wealth. You don't build wealth by and you don't build wealth by just going to work every day. By the way, you need to put that money away. So if your company has a 401k or an IRA plan, do not overlook it. Invest in it because it's usually they're going to match it.
Well, it's free money. You always
free
take
money.
free money.
Right.
You always take free money. That's my first advice to anyone. Even if you think the market's so overblown, it doesn't matter. You're taking free money that's tax free and that you're getting matched a lot of times for your employer. So at a bare minimum, you should be taking whatever they're willing to max.
Ron Williams, one of our people here, is talking about ATNF. That's 180 Life Sciences. ATNF now up 800%. So here we go, back to the days, pump and dumps. We're getting very close there, but ATNF now up 800%. So we're starting to see that now. And look,
it's actually the 3-minute chart actually still looks okay here. This is not bad. This is what you want to see. That first level of retracement. If it breaks above the bar that you saw here, 1495, watch out for a continuation and run. That's the scariest thing after yesterday. When one goes up 1400, if they get the right situation, and what they've done is Wall Street Bets, they're looking at the floats on these. They're
Right.
looking at the short interest on them, and they're seeing what volume does. And that's what you look at this. Look at that volume here on the bottom of the chart.
All right,
You
we're
can see.
open. Nasdaq is slipping a bit here, Howard. I had a feeling we're going to see a little bit of slippage here. I'm just this market just does not make me comfortable. I'm not
Tick
seeing it
still
right
up 200 here. Let's see what happens. I think that, again, what I've seen is when the SPY and QQQ move down a little bit at open, we've actually seen a day that goes to the north side pretty good. Not much data today. We saw some trade data come out earlier here today. U.S. import price index fell by 0.4%. Second straight monthly decline due to lower fuel prices. So they were expecting about a 0.3 decline, so right about there. But fuel prices falling 7% put a big component of that. Wanted to see if Bitcoin here is going to catch some ETFs moving in the right direction here in the next 10 minutes. We usually see that rotation here in the first 15. I don't think you're going to see it from the ETFs today. I think institutional investors are a little bit more wary than your retail trader there when it comes to trying to pick something up at all-time highs or near all-time highs.
All right, Howard, I'm looking at ASML now, so I'm buying some shares here. Kaboom, got them. I'm in at, I bought it at, yes, so that's not good. I bought it at 714 here. So
714.
See if I made a mistake here this morning, but I don't think so. I'm liking ASML. I think it's now starting to find that bottom here, and so I'm at 714. We'll see how we do.
Okay, we've got a little action here for Steve. ASML on a buy. I'm going to put that into the channels here for us. There we go. Bitcoin taking a little bit of a hit here, a little bit of a hit. So like I said, I did think that, institutional money isn't they're gonna take their money and run sometimes. So let's see what happens here. ETF outflows hitting us a little bit here, down 67,688 this morning. Let's keep our eyes on those pumpers here. Did any of those move for us here, Steve? Let me pull those up. So we were looking at VS. Not really here. I had the spot you had to look at there. It did not hit that yet, so nothing there. Buru not really moving in the wrong direction. CTCX, what's that doing? That was one that was looking. No, that rejected firmly at that 52 cents here, so you need to see a move back up there. Duo looks like it's losing its momentum. Tempest is holding up so far. Tempest is trying to make its run here.
Yeah, I'm not liking this ASML run here a little bit. This is testing that bottom down there.
Tell you what, TPST is one I'm going to keep an eye on here next couple of minutes. I might make a move in on that for one of our daily pumpers here. TPST holding up. I see a nice wick in the volume here on that 3-minute handle I'm looking at. If I can see some volume pull back in here, it's right at VWAP. It's going below VWAP. I want to see it bounce here at VWAP. If we can bounce at VWAP and move up, this would definitely be in play for me.
FedEx up 2% here. Look, Nvidia's up 1.15%. So they're still holding here.
There you go, TPST. Regain VWAP here. If I can see some volume, not seeing the volume yet. Need to see another volume spike here. If we can get that. Steve, IKBR down almost 5% here. I know that you were a guy that was trading using their platform. Are you still a customer?
I like IBKR. I think they're a quality company, and they just got a blip here. We saw it, right? Goldman Sachs told you it's not trading revenue right now. It's the original banking away where they bank. So we know that, but trading will come back, I think.
And we saw that with Citigroup too. Again, the haves and have-nots. Citi made a concern about some of their credit card loans that are outstanding. They are, more in that bottom rung there than the top rung, like a Goldman Sachs in their wealth division. So ones to keep an eye on.
Okay, I'm not liking this ASML. I might be taking my first loss here on Quasar Markets Live here, but yeah, I am. I'm not liking this selling here. It's a little strong for me.
And that's at 701 right now, 701.49. Chips are starting to catch a little bit besides ASML. We see Nvidia up 1.3%, TSM up 1.07. So you might get a sympathy play here, Steve.
Yeah, I'm holding off a little bit. I'm not made a move yet. Bitcoin trying to push back up above the 68 handle here.
Love to see that. Love to see that.
Yeah, Nasdaq's not holding here at all.
Nasdaq down 1/4 point here. And we do see Apple getting hit about 1% here. Amazon down at 0.61. So a little bit of the exuberance from yesterday definitely wearing away here. CNA Airlines still catching a bid. Delta has made a nice move up, Steve. You were a fan of UAL. They had good earnings reports today. I was a little surprised, though, that they...
All right, Howard, real quickly, I have bought more ASML here. I've doubled down now.
Okay.
I have bought another one here, and I'll tell you the exact price here. 701.27 here. So let me give you the mix here.
So looking at like 707, 708 area.
Yeah.
Depending on what you did there.
So I am,
Do want to point out we have Stephen Flanagan in at 10 o'clock here in about 20 minutes to talk everything currencies. Going to ask him more about the granolas there. He was all over the fact that there is anemic growth happening in Europe. So we will follow up a little bit.
So I'm in at 707.65. So that's where I'm at.
Okay, 707.65.
Let's see if we can get back.
Taking a little froth off after yesterday's nice move up. Qualcomm, another chip company, down almost a point here right now. Palantir getting hit, still retracing here. This is about 4 days of retracement on Palantir after setting a new all-time high.
It's had a nice run. I agree.
Oh, yeah. No. Nothing goes straight up. Again, I'm just pointing out, in fact, that it's actually coming to a healthy level. I like it back here at that 41.37. What are you thinking, Palantir there? I like it if it pulls back.
I'm out of Palantir. I made my run there, as you know, the last few months. I'm kind of out. We're seeing a pop here in ASML now. All right, come on, baby. Get back above that handle at about 710. I'll take my profit if it can get back up there.
Yeah, if we can get a 50% retracement here on Palantir, that would bring us down around that 40-45 level. I would definitely be interested there.
Yeah,
I think we see
it's really Bitcoin's really struggling at
61. I'd actually like it better at the 61.8 retracement, 39 and change. I want to give myself a little note here on that chart for that.
Why do you think Bitcoin at 68,000 is such a psychological number there?
I don't know that it has. It hasn't spent much time at 68, Steve. I mean, it's hit. It's why it stopped there right now today is that it's the second all-time high, so it's going to give you historical resistance. We haven't spent much time there. 63 was the spot. You know what I mean? Okay. I guess I'd point out, Steve, you were bitching at me 2 days ago that 63K was a sticking point. If I told you then you was going to 68, you would have given me a big clap on the back and said thank you. Today you did that move, and you're mad about it.
I like 68. That's where I took my profit myself.
You've been hanging out with Aaron Schurz too much, you know. Something he was up 12% on a quick couple of day pump, and you're mad at it. So I'm giving myself that marker. I'm going to be watching Palantir here. If it can get back down to that 39 level or so, I really like it there. So it's one I'm going to keep an eye on personally. It's made a great run up. It's a big company. I think, you know, my take on Palantir, and I've said it a few times for those that haven't been listening to us, is they dominate when it comes to the Defense Department, the Pentagon, all the security that's done there. And they've just made a big move now into the consumer area. And what did we see recently? CrowdStrike had a huge issue, right? Some of these other companies that are in that area, why is Palantir making a move there? The incumbents aren't doing a great job. So I think there's room for them to make that move. I do see
PIMCO's
Aaron like the
CIO,
remark there that on the Slack that I just gave him that little twist.
PIMCO's CIO says for global fixed incomes, he's a 50% chance of global trade war,
Oh,
raising downside global growth risks. I agree.
I've
It
seen
doesn't
those
matter.
fights. I was going to ask you about that, Steve. Last couple of days, we've seen these arguments between both sides of the political spectrum
Yeah,
about tariffs. Do they work? Are they?
never.
Should they be in place? What should be there? So you're not following along with Mr. What's it, Luckman there yesterday that was
What I
talking.
have a problem with is when you put tariffs on just to stop a country from, bringing their product to us, right? In this case, China to bring in the United States. When there's a product being dumped in the United States or being a product in their country, yeah, tariffs can be help a little bit. Um, Maybe they have too many washing machines and the Chinese dump all their washing machines in the United States, and that's what happens, and Whirlpool gets hurt. That's a different situation. But to put global tariffs on everything, that's just stupid. It
So
never
the
works.
argument I heard yesterday, I'm falling to this side right now, which is not very Howard like. But what I'm gonna say here is, can you buy a Ford or a Chrysler or a GM in Europe very easily?
No,
No, there's 100% tariffs. We need to
right?
get these countries back to the bargaining table. We need to get this to a spot where it is. And I agree. If we don't make it here, then there shouldn't be a tariff on it. But
When
if
we
we
do it,
produce
they're
it
going to do
here,
it, right?
if we make
So
it here, there needs to be tariffs until we
I'm
have
getting
fair open
slaughtered here
markets.
at ASML.
And
So.
that's my libertarian view for the day. And I am not a libertarian. I just right now that's how I do feel that. I do think that we get taken advantage of. VIX trying to break 21 here, but not seeing a lot of movement there. QQQ about a quarter of a point on the downside here. Let's check out those pumpers here. Any of those things moving that we were looking at here? Let's take a look at Tempest. Sort of flat. Not really much movement at all. Still above the VWAP, so I like it. I like it here if it can bounce off that, but not really doing a whole lot here. Not doing a low lot for us. Buru, oof, that one went the wrong way. CTCX, that went the wrong way. So we had our levels in. Most of them didn't make it. TPST, the only one really back still in play here. And that's battling to stay above the VWAP. ADTX. Nope, that's pulling away. SLRX actually making a move here. SLRX, another the ones we were looking at here. If that gets through VWAP here, watch for that. Got to get through 180. So if we can get SLRX through $1.80 here, it's one that would be in play here. So keep an eye on that. XHG moving in the wrong direction in general. Aspen was another one that had moved up. That one was a little weirder because it made a pump at 7 a.m., not your normal 6 a.m. pump that we see.
I'm getting a little crushed here on ASML here.
Yeah, 694. Oof. Does look like, well, yeah, if it breaks, I'd be looking at the low here. That's 689. If it gets back below 689.97, you're in trouble.
692.56. So it's hurting a little bit today. Don't always win them. Okay, so I'm 30 for 1 or 30 and 1, right?
Well, you're not out of the game yet until you make that trigger pull. Then we'll call it. Oof, Bitcoin getting hit pretty hard here on the 3-minute chart. 67,276. Let's take a look, see if any of that's liquidation driven. I had coin glass up, I thought. There it is.
Yeah, Bitcoin's still getting hit here. Drop 1,000 points here.
The thing though, I look at, it's not liquidation, so it's ETF restructuring, it's institutional, it's things, it's outflows and inflows, not so much on the liquidation side. So that keeps it still in play.
Well, this morning it hit 68.2, and now we're at 67.2. So,
yeah, but its low of the day is 66,750. So again, as long as it bounces above that low of the day for today, I'm okay there. Bitcoin's gonna have volatility, buddy. It's part of the game.
We know that's a fact.
QQQ now down almost half a point. Tick is positive, and it has been fairly positive here.
Yeah, the advanced decline line on the New York Stock Exchange is literally positive by 1,400. That's pretty good numbers. So that should be a
You can see the
positive for
Dow
the
Jones
market.
is up about a quarter of a point. Oil down a little bit more here, 73. 70, trying to get below the 70 and a half handle here on WTI. Apple now down 1.27. Amazon down. ASST up 8%, so we do see some winners here. Delta Airlines now up 3.74% here. DJT up 5%. Another one that's been the Wall Street Bets group moving it. Huge volume on that yesterday. What's the volume looking like today? Yeah, 5 million in already. Normal average volume is only 23 for the day. So DJT
I am,
definitely in play today.
yeah, ASML now at 691. Starting to hit my limits here where I can't not liking this too much.
Retail catching a little bit here this morning. We got Nordstrom's up 1.58%. Kohl's up almost a point. Levi up
Antonio
another
Costa
quarter
says
point.
MNTS.
What was that?
MNTS.
Mints. Yeah. Momentous. Seeing a halt on BDRX. BDRX. Biodexa Pharmaceutical. This is one we were actually watching yesterday. Did not break through that VWAP that I had pointed out in this 3-minute chart here, right there. ATNF still up 828% here.
Seeing a little bit of a bounce there in Bitcoin, 67.5 once it got off that that red line there on 67.2. Yeah.
Does look like ATNF's trying to regain some momentum here. That's a pretty bad double top, though, M formation on that 3-minute chart. Let's see what else market move is here. STEC still up. VS. VS making a move here now up 321%. %413%. VTCS pointed out that one, but didn't think it was it wasn't looking good early. Making the run now. I drawn in the line I was looking at. So now look, Duo. You're going to see some of these one sympathy plays starting to come back here. Duo up 58%. Tempest, though, fell the wrong way below that VWAP. Tempest lost everything
I'm hearing
there.
reports that Israel's retaliatory strike against Iran is now ready. That could happen.
Yeah, I saw that this morning. They did say non-military, non-nuclear, non-oil. So, or excuse me, all military.
Oh my.
So we'll see what
Okay.
that means. We got gold at an all-time high again.
Yeah.
2681 made it 2685. Tell you what, silver. I know you downsized your silver at that 33 mark, and it's had trouble getting over it.
I'm still got a sizable position on silver, so I'm not. I still think we go to $40 or $50 a share or an ounce. I think we're very close to a breakout here if things get really bad here. STEC has been halted again. STEC.
It's gonna pump. That's on this one.
It is all over the map there. STEC.
Yeah, up only 500, only up 550%. Look at that gap though from the last. This will be its second halt here this morning. AIFF hop now stop too. AIFF. Firefly. That one's gapping down.
Fed's Kashkari says $1.3 trillion market cap on Bitcoin is still useless.
Yeah, useless. No, worthless. Worthless was the word
Worthless.
he
Yeah.
used. Worthless. Yeah.
Yeah. I have another
Told
word for
Mr.
him.
Eyebrows I said to kick rocks. Listen, I don't know how the guy from Indiana Jones became the Fed, one of the Feds, anyways. What else we got going on here, Steve, today that you're looking at? Anything?
I'm still looking at FedEx being up 2%. We talked about Dow theory, and it's right on target. Oh, gold spots. Gold just dropped there. Look at that gold drop. From 26.85 to 26.77, almost $10 an ounce just in one fell swoop there. Whew.
That's some profit taking. Costco down 1.28% here.
They're not selling enough platinum
Platinum,
bars.
yeah. I still have my goal there, 871.13 is where I want to buy that. I pointed out two spots. If it broke back through that 891.16, I was looking at it also. So I want Costco in my more long-term holding. Wow, Intel getting slapped today, down 3.38% here. And that chart doesn't look very good on the daily chart there, a little bit of an M formation. That's never a good sign. China back in play a little bit today.
Yeah.
JD up almost 2 points. I saw Baba was up earlier.
Trade out loud right now. Talking about General Motors, GM here. They like it long. Look at that. We talked about that this morning. Now 2% this morning. I told you, electric vehicles. I mean, it is what it is.
UNH catching a nice little bid today, up 2.2% here, bouncing back. It's a nice move by UNH. Foot Locker up a half a point. Bank of America up 1.41% here today. So banks. They did have earnings yesterday. CG down about 1/4 point here. DJT losing some momentum, only up 3.64% here.
We're seeing OKLO now up 19% here, still pushing.
Another play in that nuclear area. Wow, that one is definitely moving nicely. Jeremy Vreeland all over that one.
Yeah.
TSM, NVIDIA up here this morning so far. Fun. We were watching that yesterday. Was the pumper we were on yesterday. Pumping again, 19% today. Not one I would have held overnight, though, to try to see if that would have happened. We called that out, as you can see here, yes, when it was at 544 the other day. Actually,
NASDAQ still pushing to the downside here. It's just weak. NASDAQ is very weak right here, down to 100, about 100. Yeah.
Big tech, Google down.
Oklo still pushing here, a little higher here.
Definitely a runner. Microsoft. So, yeah, big tech down 1.449. Definitely for those that say things, do they always just keep going up? PLCE was one we were watching. Remember that, Steve? Children's Place. Look at this retracement
Yep.
that's making here. You know, some of these that just go up at unreasonable spots. You know, it made a move, gapped up from that 478, made a run all the way up to 1980. Now back at 1194 again, almost a 50% retracement there. Those numbers don't lie. Those Fibonacci levels work. Robinhood having a nice day. Speaking of
ASML continue to get slaughtered here. I'm at just about my level here that I can handle here. So I think their CEO needs to be replaced with all of his talk lately.
yeah,
Okay, come on, baby, get back up there.
trying to pull off those lows of the day. Tempest back up a little bit here, 20%. VS running now up 500% here. VS, wow. We talked about it if it broke through that 427. It broke through 427. It's at 711 here. Again, we pointed out the VWAP here this morning, first thing. 431 to 711. Wow.
Seeing a little bit of support here now in Bitcoin here at 67.3 now. So could see a little pump back up there. Let's get back up there. We're gonna make another run at it, right?
I don't know. I don't think we break 68 today on Bitcoin. I think we're going to stay in the zone. The 67, 750 area is going to be key resistance now for a little bit.
All right,
And
you
that's
heard it.
okay. Let's balance around that area, and then we'll look to move up from there. That's what we want to do. Tick is looking pretty good overall. Still up 112.
Come on, ASML 689 now. Let's get back up there. Get back over that 690 handle there.
VS now, if it breaks this 711, watch out. That's got to be stopped. It is stopped. VS, the one we brought up earlier this morning, is now halted. VS halted here. This should be fun to watch. 711. I'm going to leave this up on our screen, Steve.
My.
956. So we'll go right at 10:01, right? 5-minute stop. Duo making its run now up over 50%, so it's trying to make its run back up here. Just bounced off VWAP here. That looks pretty good. Could be in play here. Need to see that volume sort of pick back up, though. You see that VS volume. This is going to be interesting when it breaks through here after the halts.
You liking it?
STEC halted on the way up here again, too. Are you kidding me? Just seeing STEC hit the marker here as another stop. Up 685%. Look at that, Steve. I like VS. I think it could go right here. These things after yesterday, you know, VS, STEC, both coming off halts here. I might try to catch VS off the halt here. I'm actually going to maybe give this one a run.
I'll go with you. How about that?
Let's see what it does. 7-Eleven. I mean, it's tough to go on something that's up 500% for the day. But it has...
All right, I'll buy some shares there. Why not?
Still got about a minute here before it's going to open up. Let's see what we get here out of this. We're going to have our
I
man. I
haven't.
see Stephen Flanagan waiting for us here. We'll bring him in to watch this with us here in 1 second. Let me get my transition set up. Stephen, you ready to watch and see if we catch one here? Let's see what we get. Let's see what we get.
There's 692 now back on ASML. Whew.
You're feeling a little better.
Yeah,
We
I'm
got
okay now.
Stephen back in the page here with us. How you doing today, Stephen?
Good morning, gents. How you guys doing?
We'll let you
We're
know in a few
training this
seconds
morning.
here. I don't want to make any commitments yet.
What are we watching?
VS. It was a morning pumper that I pulled out. If I listened to myself, I said when it broke VWAP at 4:30 to get in at it. It's now at 7:11, but just got halted on the way up. After yesterday, I don't know if you saw DRUG jump 1,500% on one of these yesterday. So Steve and I are going to have a little fun, see if we can't catch one here off of the halt here. So I'm actually putting mine in right now. Never use market orders here because you don't know where this sucker will open.
Well, it is halted, so we have to. Okay, 730, 740. Yeah. Okay.
Oh, no, 650, 676, 684. Come on, baby. Let's turn it around. Here it goes. I am in 693. 693, 709, 727, $8, 832, 838.
I'm in.
Here we go. I'm getting out right now. I'm out at 821.
You gotta love
saw it
this.
right there. 693 to 821.
859. I'm still in.
I have got the weakest hands there are on something like that, but I'll take that and run.
I am
872.
out.
It's still moving.
Bam. 882. They're still going. Look at that.
913. Look at that live
here,
on the air. What a
Yes.
move there. Both of us in.
Wow.
I'm out. Steve's still in. Steve, would you put a trailing stop in here? What are you going to do?
I'm out. I sold at 864, so I'm in at 730 and 864 out.
And
so
I had 693 to hit
943 now. Look at that.
That is great. Well, hey, Steve, hey, even if ASML goes the wrong way for you there, you got to be in a good mood on that one right there. There it goes. See?
Yeah, we sold. Yeah, okay. Well done.
There we go. I'm going to get that off the screen because I don't want to be staring at it saying when it hits 12 later on.
Somebody's been listening to the Big Beat Rules of Trading there. I love it. I love it.
There you go, live.
Take the money and run.
That's right. There you go. From Stephen Flanagan, you heard it. Take the money and run, right? They can't get it back if you take it to the bank. Stephen,
right.
So how are we doing today? I think I hit you up earlier this morning and told you I never even heard of granola before, but it sounds like it's the right name for something that doesn't move, that's anemic, that, I'm a steak and potato guy. I'm not eating granola. What's happening over in Europe today?
Everybody's got to have the cliches, the slogans. And, you've got a situation in Europe right now, ASML. Okay. They had, bad projections, blah, blah. They're the number 2 largest company within Europe.
Right. Yeah.
And the bottom line, to anybody who's looking at the world is trying to box China out.
Right.
And the European granola, or this is the expression, I've never heard it really until the last couple of weeks, but they have hooked their wagons to China.
Well, I don't feel bad that if you only found out about it a couple of weeks ago, I thought this was something that was like really well known for some reason. I never heard of it.
Look,
for those of you, we need to explain what granola is for those of you out there that don't understand. This is the Mag 7 for the United States. We call them the granolas over in Europe. This is the big one: GlaxoSmithKline, Nestle, L'Oreal. These are the ones that are like for our Mag 7. Think of it like Microsoft and Apple. It's their big ones over in Europe. And you're absolutely right, Steve. I mean, we've all been trying to box China out, but we can't do that. I mean, it's been a political football here. Like we're going to put tariffs on China, and we're going to. Xi Jinping isn't going to handle this too well. He's not going to be a happy camper about it. And I don't really understand the political football about hating on China.
We've discussed this little bits here and there, through the shows that we've been doing together. And China has some major, and I underline major, structural problems regarding debt. And the debt is not a measured debt that we in the West do. It's their states. The states have massive amounts of subsidies from the central bank, the central government, and that's an unmeasurable number.
Right.
You can look at people talk about China. If you had to throw a dart at a board, the debt level's probably somewhere in the 45 to 50 trillion dollar level. That's massive. So China has some structural issues, and they're trying to deal with them while growth is beginning to slow. Now, Friday, we have China's GDP out, and it's looking like it's going to come in 4.4, 4.5. And the magic threshold has been 5%. China needs excess of 5% GDP growth to keep the economy and all the pieces moving. 4.5 is not a good thing.
No.
And the markets are disappointed so far with the commitment to stimulus that the government is showing.
Is that why everybody's buying gold and platinum in Costco lately?
And Bitcoin. Hey, don't leave us out this week, guys. Don't leave us out this week.
Don't leave Howard out. Bitcoin is definitely following suit. I think so, Steve. Yes.
Yeah. I mean, when you look at it from that perspective, people have been asking me a lot about gold in general. And I'm like, the reason that gold's pushing higher is because countries are scared, not just retailers. You're seeing these foreign countries that are buying gold at huge demand, and they're not stopping. They're literally continuing to buy. But what's going to be the top for them? What's going to stop them from continuing to buy their gold? There's only so much gold in the ground. There's only so much silver in the ground. There's only so much Bitcoin. At some point, they're going to be like, this is too expensive. What to you tells you maybe it's time to take my profit and run?
Well, let's say if inflation really starts crumbling faster than it's already crumbling.
Like in Europe.
Yes. And that's one of the topics, Steve. So let's just answer that question. Howard and I, after you signed off the other day, we started to talk about a pending BRIC meeting in Moscow.
Okay.
An awful lot of under the ground talk about how gold would back some sort of different type of currency that the BRIC nations, in one of their lofty goals, would love to move away from the dollar. Is it going to happen this month at that meeting? Absolutely not.
No.
But continued discussions around centering something that's tied to gold seems to be, in the marketplace.
Okay. Could that be why China also? I saw that they're starting to get into the silver market heavily too. There's a lot of talk that they're out there buying a lot of silver currently.
Yeah, and of course the industrial demand for silver, again, as Steve said, it's a limited resource, and therefore the supply and demand equation kicks in. But in this world that we're in today of money moves first, let's look at this environment. Central banks are urgently searching for a new slogan. What happened to higher for longer? And transitory, well, that didn't work. So maybe they should say, hey, you're on your own. And maybe that should be our new slogan.
Wow.
I'm getting that shirt made up right now. I have Fire the Fed shirt, Steve. I haven't, Steven, I got to share with you. You'd like a lot of my shirts that I'm not allowed to wear on this show. But I have ones that say Fire the Fed, put the banksters in jail.
Yeah, well, we have price pressures around the globe. They're rapidly easing. It's not any longer that even the UK CPI is now 1.7. In the Eurozone, on the 17th, you have their number coming out, expected 1.8. New Zealand suddenly down to 2.2 from a 3.3 level.
Right.
Canada 1.6. So we're now at a point where higher for longer is now outside of the U.S. risking a global slowdown, if not a recession. Okay, define recession, quarter-to-quarter negative growth. Okay, you've got the UK and Europe at 0.2, 0.3. I mean, come on. What are we
and Bitcoin back to 68,000 here. Look, it's I've said recession. I've said the big bad R word.
Mhm.
And one of the things that Goldman Sachs said today, David Solonovich saw it in the Wall Street Journal today, 45% up, because he says he wants to go back to the basics, right? The basics of underwriting deals. And we've said this, as rates come down, M&A is going to be super white hot.
Yep.
We're already seeing that now. Is it going to pick up even more in the next 6 months to a year?
I would think so, Steve. The
Yeah.
environment is very ripe because you're now at a point. There is no technical recession in the world right now, although growth is slowing. But you've got a situation now where you're getting global central banks cutting rates, and there is no defined recession.
Right.
We have inflation coming. This is very ripe market.
Tell me, and I'm a history buff. Tell me the last time this has happened where the Fed's cutting rates, we're not in a recession, and yet the markets are at all-time high.
Yeah, I don't recall, Steve. Honestly,
I cannot recall a time like that. Okay, I'm not the only one. Then good, because
Yep.
how do we play this then?
Well,
I like to use history as a indicative, but there's no history to put this in play.
I mean, let's look at the short-term lineup in front of us. Thursday, ECB probably cutting a 0.25% to 3.4, followed by the Bank of Canada the following week, probably going to have to cut to another quarter to 4%. You've got RBA shortly after that in Australia, probably has to go a 0.25% to 4%. You've got Bank of England November 7th, Fed November 7th. Bank of England's probably going to have to shoot with a 0.5% cut now. And this environment of everybody trying to race to get out in front to cut rates now, reflective of the economic environment we're in, is what's ahead of us. So throw in, you got UBS suddenly talking about an S&P target of 5850 from 5,000, which was their target. Howard, we talked about the double bang. You're going to get currency appreciation in the dollar, and you're going to get a market moving up. And the Dixie is right at the level we've been talking, 103.30, 35. This is the big break. If you're breaking here, you're going to see this dollar index take off into that 104.50, 104.70 level.
I always have it up here for you. We've been talking about that. Now, I have to ask you, and I didn't warn you about this, but bonds, seeing that a lot, bonds underweight, a lot of talk that bonds, historical move with people, with these banks and investments and wealth areas selling off some of their bonds here, moving more into equities. How will that sort of play out here with the Dixie getting that high there? Welcome back, Steve. Sorry, I don't know what I did there to you. I somehow kicked you out of the room. You were taking all my airtime, buddy.
I'm worried that that thought. I mean, if I look at the Dixie level at 103.30, I'm not worried. This isn't what I call high. In recent ranges, maybe, but I think you've got a significant upside potential. It is overbought right now. I would love to see a retracement back low, but that's going to play into a market that is not long in the dollar index. So in typical those type of environments, if you look at the move up, it doesn't let you get in. You've got to be forced in to come and pay the market. So I do see this potential to trade higher as not an extension necessarily, but that double bang we talked about of currency appreciation and equity market appreciation is a ripe target right now in the U.S.
So that would be the equivalent of a short squeeze, is what we're saying, right? We got to get Wall Street bets on the currency game here. The short squeeze could come in, push this DXY up. I love that call right there, and it makes sense, and it explains the market dynamics. Why I love having you on, Stephen, because that's something that for me, I wouldn't, I don't look, until I started talking to you, I never really put lines to a thing on the DXY. It was a number I looked at every day. I wasn't looking at the charting of it, but it does seem to follow like everything else in the financial markets.
Yeah, and here's one that'll perk Steve up. The kahuna, the big kahuna of the short squeeze is about to get unleashed. You heard the tariff talk yesterday from one of the presidential candidates. Okay, so whether those things translate, not sure, but Mexico. And we've talked about Mexico as a high interest rate currency. If you look back at a chart for years, everybody has plowed into Mex to be long Mex at greater than 10% interest rates. Now, suddenly, the IMF is talking about lower growth in Mexico because of the restrictive monetary policy at a time when we're putting a talk of tariffs on Chinese automobiles made in Mexico that will slip in through the free trade agreement. This is a scenario where you could see, I mean, dollar mex yesterday, we moved from 1936 up to 1994. If you get over this 20.15 level, you're looking at a potential surge up to 22 to 23 in the Mexican peso dollar relationship.
And that'll
Oh,
be
I
a
have
lot
it
of
up the daily
margaritas.
chart here. I mean, you can see that resistance level at that spot, but there's also that's the 52-week high. Is that? I mean, you got to go back all the way into 2022 to see those levels.
I'll call you, Steve, and we'll do margaritas and jalapenos down across the border at 22 pesos.
Yeah,
yeah, let's go.
Let's
I
go, Steve.
think that's part of it, right? We've been saying that the strong dollar is not good for the world because, quite frankly, we want them to sell our products to the world, right?
That's right, Steve. And you and I can go back to the Latin American debt crisis.
Oh my God!
Yeah.
And that was all caused primarily with everybody in debt, and then the dollar value surged, and they have to pay back in dollars. So it does create a problem, Steve. And there's just so much to talk about when you look at the macro world of currencies and how it overlays all of the financial markets. And you've got a perfect storm brewing in the marketplace. You throw BRICS, you throw the U.S. election in, you throw tariff talk, gold, Bitcoin, and suddenly, the dollar index could explode, and you've got a situation all coming together with nobody positioned.
Right. And that'll crush
So
margins.
how would our investors position themselves, Steve? So if someone like me who's not a forex trader by nature there, how would I position myself? What are some proxies maybe I could look at to get coverage of this?
Well, back to my slogan, you're on your own.
Thanks a lot, man.
As Steve just said, market turmoil, volatility goes up, right? And markets begin to just completely disconnect from one another. All correlations go out the window, and you've got this unsettling period. I would have to think that in general, you would look at that sort of volatility causing equity market weakness until people have a better handle on what's going on. I think that the U.S. would probably be the least of the ones that concern. But this is where my long-held belief comes in, and I focus on Europe. Not only do we have a geopolitical event between Russia and Ukraine constantly overhanging like a wet blanket, but now you've got an economic situation in Europe where cutting rates, they can't cut fast enough to stimulate that growth. So I worry about that sort of situation.
Yeah, I mean, I'm just reading the Wall Street Journal here this morning. Right on the front page, it says the probability of a recession in the next 12 months, according to 66 economists, coming into this is still at 50%.
Yeah.
Yeah.
So wow. even there, which means that an equal number of people are on both sides of the boat fishing, and as that number tweaks, you're going to start seeing one side begin to move. And, this market moves, as we've highlighted many times, electronically. I'm just looking at what you guys were looking at today. That's all electronic executions. And, you send in a market order there and, oh, my goodness, you don't know what price you're coming back with.
That's right. Yeah.
Yeah. The spreads there were a little crazy for sure. Dixie's still pushing up here this morning,
Yeah, I mean, look at Bitcoin right back above 68. I mean, look at that, Howard. What was up at that? 68.2 now.
That's actually pretty. That puts us back, like I said, 68.5 puts you at theory there for the squeeze up on some liquidations. Let's see quickly. I don't think.
I see Morgan Stanley now up 7%, Steve. Morgan Stanley, Goldman Sachs up big today. Are they going to get back to the currency market? I mean, J.P. Morgan is where your bread and butter was for many years. currency was really huge over JPM. And what about now? Are we going back to the worlds?
It's always currency trading markets, while they're not the premier desks that,
Sexy as we called it, right? Back in the day, yeah.
Yeah, not the big investment bank desk. But Steve, you hit on M&A, and I think as things begin to percolate here, you've got to be looking at the banking sector in general to continue with pretty good results, provided that we don't start seeing loan loss reserves and things increasing at any increased rate. It's a pretty good environment right now for a trading desk. So
Right.
I would look for these earnings to continue along these lines. And you notice the trading desks are what's powering these earnings.
Yeah, and I'm about to pull up my favorite one is the disco rate. How are we doing on the disco rate? Are we moving forward on this one, or is it or are we just man? I'm a little nervous about this.
Which one is that, Steve? I'm sorry.
The disco rate, the discounted rate. So let's say 5 and 10s, yeah, or the discount rate from the Fed to the
I mean, I'm looking at a 4% handle on 10 years. As long as we stay at that level or above, then I think things will continue to be pretty good for the dollar index. But the Fed has got to fight the same thing that the global banks are all fighting, and that's going to be price pressures are down, interest rates are coming down. And yet again, we find the Fed quickly slipping, or let's say global central banks quickly slipping behind the curve.
Yeah. And you're talking about the 10-year now, 4.01%. It's struggling above it and it's struggling below it. So you're saying that 4% is pretty much where neutral is for the Fed right now?
That's where I think, Steve, because after all, if you start coming much lower, there's got to be some premium to buying the paper that's all over the world.
Yeah. Yeah, I mean, and for those of you who don't know what the disco rate, as I call it, disco ball, it's the interest rate that the Federal Reserve charges banks and other institutions to borrow from that. So there's a little bit of a disconnect, and so that disconnect is people trade on that, actually, believe it or not. But look, right now there could be less profitability from borrowing because the rates are coming down, right?
That's right. Yeah, and that's another thing. But I didn't really see a major kick to the banks from that borrowing, from the pickup in interest rates, right? I mean, that wasn't a real. Right now, I think it's the trading markets, and of course, volatility is key to that. So that's where I'm focusing, and I think volatility is only going to increase. And it's great to be the price maker in that environment, and that's what all the banks sit as price makers.
And what about this notion of decreased money supply with the M2, M3, that the Fed's starting to sell off some of their assets, maybe not have the printer go burr so much anymore? That should push our dollar up again, right?
Steve, you're hitting on some real below the scenes, picking up the hood and looking into the engine. Yeah. You can't be seeing money supply growth declining, because that in a general picture is a little bit longer term effect, but it's not going to be supportive to a growth market. I think they're caught with the slogan of higher for longer. And I think they cannot stand when people echo that, well, what about higher for longer? And I think they're caught in a way right now because they are seeing what's going on in the world, and they've got to start reacting. And money supply growth has got to begin to pick up to keep the grease on the wheels.
Yeah, and I was going to pull up, if I can, Howard, if you or one of us can pull up a chart of M2, which is the money that's in savings accounts, mutual funds, CDs. You can pull that up from the any way you can do that. Look, I think money supply is heavy right now from a perspective of in the banks, but I think the Fed is starting to get rid of their balance sheet, and I think that's becoming a problem. Is the Fed looking at the amount of money in the banks and saying, okay, well, I feel like I could dump a little bit of this and sell some of these assets off?
I believe, Steve, that they still have that prevailing wisdom, that they feel that this is still a market where they can unload. And, as Howard just put this chart up, while it has come down, it's still at very lofty levels.
Right. Yeah.
I mean, let's go back 2008. I always try to ask people in the business, at the that do money supply. How much money did the global central banks, governments, fiscal and monetary stimulus add to the global market from 2008, let's say, through 2022?
Yeah.
And you get varying numbers, but I got to think on the high side, it could be 50 trillion.
Right now, I'm telling you right now, you're right about that. I think I'm looking at 2008 myself. For those of you who don't know,
For some
'08 was
reason, mine only goes back to 2016 here.
right. So '08
Oh
was the
no, there it
crash
goes.
that he's talking about, Steve's talking about, and of course 2020, 19, 2020,
Yeah, I
2022,
had that up already.
COVID. That's where the government was just flooding us with cash. It could actually be higher than 50 trillion, to be honest with Steve.
So yes, they're pulling back, they're selling off assets. We talk money supply is easing, coming off, but we still have, you know, as I used to like to say, you walk into the gymnasium and you're in knee deep gasoline, and someone walks in with a cigarette, and you
Right.
look at it's just an environment, Steve, that Bitcoin is highlighting and
Right.
other things, gold is highlighting. There is still
So if
amp.
I was a president or I was a Fed governor, I'd say, you know what? Here's how I would do this. I would just stop printing money. Let the dollar come back up, and you don't have to worry about a strong dollar. It'll come back on its own, right?
Yes. However, you've got everybody addicted to 15 plus years
That's right. Yeah.
of policy, and they have created so much exposure based on that. If you pull the needle out of the arm in one shot, suddenly the patient goes into shock,
Right.
and
Yeah.
they got to avoid that. So it's got to be this gradual, but they've got to acknowledge that everybody's hooked on liquidity, and you just can't stop it.
Don't
Higher,
get high on your own supply kind of feeling there, Steve Flanagan.
that's
Yeah.
a beauty. That's a beauty, Steve.
I mean, that's it. This is the craziest chart I've ever looked at.
Yeah, I mean, this is seriously the flood of money, and if you pull, I have always said if you take M2 and you overlay it with U6, which is the unemployment numbers, people don't want to work if they're getting money from the government. I think that's a big no-no for me, and you're seeing that. I think you're right, Steve. I think
And we have to keep in mind the key word in this was to combat deflation.
right.
Deflation scares the central banks more than inflation.
Right.
Because nobody knows how to combat deflation, because only go back, to 1929. That was the only period on record what they have, and that's why they did what they did in flooding the world with capital. And now, bring it back to our China story. Now China is faced with, are they moving in, following the Japanese for 25 years? Are they now moving into that cycle of deflation? And that's beginning to scare them. And that's why the markets are reacting negatively on their powder puff sort of response so far.
Yeah, no, I think that they're very nervous about the deflation, especially with real estate. We saw something changing in China over the last few weeks that I thought would never happen, but letting more and more people invest in real estate in China, the average Chinese person, as opposed to the government, or more in this case, Evergrande was a big one over there. That's, to me, is a big change in Western philosophy over in the East. That's got to be taking notion, especially at places like Goldman Sachs, who invest quite heavily internationally. Are you seeing that too as well, that Xi Jinping is a bit nervous about the whole house of cards falling apart?
I couldn't agree more, Steve.
Wow, okay.
And it's a subject that I think I study price, and if you look at the price right now, you got the first knee-jerk reaction in the stimulus proposals, but let's see what you're following through with. You got to have the follow through, and the markets are very nervous that the bigger picture of China is beginning to deteriorate.
Well, we'll leave it at that, I think, Howard. Here we are at 10:30. Now I'm worried about China. I'm glad I sold all my Chinese ETFs off after this nice pump. Wow. Well, ladies and gentlemen, Steve Flanagan, Mr. FX from JP Morgan, and I'm glad to be part of Quasar Markets, brother.
Thank you, Stephen. I do think the China situation will stabilize in here. I want to make sure I say that, but it's a longer term issue, just as the European situation is a longer term issue. Something to keep on your horizon.
All right. Take
Absolutely.
that.
Well, for Stephen Orr and Stephen Flanagan, I am Howard Greenberg. Thank you for joining Quasar Markets Live. Please make sure that you like, subscribe, and share this with your friends so that we can keep bringing this information to more and more people on a daily basis. I'll be back at 12 o'clock with Agnieszka Woods, our trading mindset coach, to go over a little bit about her program. She's got some opening up coming here in November, so I want to let you guys know about that. And then at 1 o'clock, we got Scott Bauer in from Prosper Trading Academy to talk options. I will be on Scott's show on Tuesday. Next Tuesday coming up, I'm going to join Scott on his show from the SIBO there. So should be fun.